How to use the absolute gamma exposure graph. So the absolute gamma exposure graph, which is this one right here, was actually made for you to be able to see four distinct things. First, the most important thing for you to be able to see here is the flip area. So that's where the gamma goes from positive to negative. And you can see that here. The bars going up are positive and these bars going down are negative. So this right here would be our flip area. This right here would be another flip area. Why are flip areas important? Number one, they're comfortable areas for the market makers, meaning they want the price to go there. They don't have to spend anything for the price to actually be there and consolidate there. It also means that we have a potential bounce or consolidation in those areas. Flip areas, when we first start the day, is a very possible bounce level. So in the beginning of the day, it's very possible that we have bounces on the flip areas. Again, these areas right here when it goes from positive to negative. Now, remember, it is a bounce level, but it also is a support and resistance level. So if the price breaks a flip area, let's say this is where the price is right here, where this yellow dotted line is. If it breaks this flip area here, this now becomes a support. If it doesn't, this becomes a resistance. So if it breaks, it's going to touch back and bounce. If it doesn't break, it's going to touch back and go back. That's how it works. If it reaches the flip area in the beginning of the day, that's the direction of the day. It becomes the direction of the day. Now, if it reaches it from the halfway point of the day on, it's more of a consolidation, and it's likely that the market will actually end there. It'll close there. The second thing is the implied volatility. You can see implied volatility through these yellow dotted lines right here. This yellow dotted line that looks like it's going absolutely everywhere. How does this work? Pretend that this line is a closed line. It's just a line hanging, and you put a drop of water on it. If you put a drop of water where the price is right now, where is the water most likely to go? It's going to go down. The same thing happens with the price and the implied volatility. The price is the drop of water, and the implied volatility is the line. So the price is more likely to go where the implied volatility is lower, just like a drop of water. Now, it's not a rule, it's more of a confirmation. It's not going to follow it every single time. And how do you use this? Well, if the curve is above the price, which it usually is, let's say, see this curve right here, it's above the price here. Then it's easier for the price to go there. And we can actually see that because it's not as steep as it is here. Right here, it's very easy, it's very soft, and this becomes way more steep. So it's going to be harder for the price to go here than it is to go here. Normally, the curves are above the price, but what you need to look at is the actual curve. Again, if it's more steep, it's going to be harder for the price to go there than it is if it's easier, if it's softer. Right here, the price is it's easier for the price to go here. Remember, the drop of water. If you put a drop of water right here, it's going to go down, not going to go up. And then the third and fourth biggest things are the positive and negative bars. So the biggest bars of the days are targets. So for example, this right here, the 5,400 is a target and the 5,300 is a target. These are both targets for the day. And these bars are magnetic and repellent at the same time. How does that happen? How does that work? Well, it's magnetic because it attracts the price to that target, and it's repellent because as soon as it hits, it wants to just completely repel. So it's also a bounce level. And those are the four most important things you can see in the absolute gamma exposure graph. You see the flip area, you see the implied volatility, and you see the biggest bars, positive and negative, which are the targets for the day.